everyone, welcome to a brand new episode of Trader Babes. My name is Erica. Don't forget to like, subscribe, and share. And also don't forget to follow us on Twitter at Trader Babes. Our guest today is a professional trader with experience trading both personally and for big banks. So he has a very unique perspective and a world of knowledge when it comes to trading and the market. We're going to be discussing pullbacks in big names, how to spot tops, how to spot bear traps and bull traps. We're also going to be discussing how he utilizes different indicators and other methods in his own trading. And then we're also going to be talking about his big picture market analysis and what's to come. And with me, as always, is my lovely co-host, Aria. How are you today?
Good, Erica. Excited to talk to JP.
I know, we learn from him every day. Hey, JP, can you hear us?
I can hear you, girls. How are you doing?
Good. How are you?
Doing good.
So I know we're going to be talking about a few different things with you today. And as I was saying in your intro, you have a lot of experience trading both personally and for banks as well, right?
Yeah, that's right. I had an institutional background. I did a brief stint there, and I left to end up doing my own thing.
And the first thing you're going to talk to us about is some pullbacks that we've seen recently in a few different big names. And I think you should be enabled to do a screen share. Are you?
Yeah, let me see if I can share this screen here.
Okay.
So yeah, let me know if you can see that. Looks like
Yes,
I have permission
can see
to.
it. Mm-hmm.
So, I mean, this market's been crazy, right? Like we're seeing these runners, they're going up hundreds of percent, they're collapsing, they're coming right back up. And it's just a product of all this excess liquidity. So I don't know when they're eventually going to die. You know, maybe at some point next year, they might even be the new FANG stocks. But you don't want to get trapped on the wrong side. So when I do my analysis on these runners, I want to keep it as simple and as objective as possible. So this is the process I use for finding a potential top, and you would just flip it upside down for finding a potential bottom.
Mm-hmm.
Right. Let's take Tesla, for example, right? This is a stock that seemed like, you know, it was never going to pull back, and it just continued to ramp up. So when you see a trend like this, a lot of people, you know, they want to short it. They're like, man, this thing's just way too extended. But how do you figure out where is a good entry point and where it's going to pivot? Right. So I use a weekly chart, and this gold line, this is my preferred moving average, 20 simple moving average. Okay. And MACD and RSI. You want to look for a divergence. And when you want to short sell, especially if you're trying to swing short, if you're on the wrong side in this market, you're going to get run over. So you got to be very methodical.
Can you explain for those that don't know, who are, you know, newer traders? You said spot a divergence. Can you tell us what that looks like? What should they be looking for?
Yeah, so a divergence just means the market is trending in a certain direction, but you have indicators that are moving the opposite direction. Okay, that can be your warning sign. So for example, Tesla, right? You know, you get this moving average, it's really ramping up here. So is the stock.
Mm-hmm.
And the RSI, if it's over this top band here, that is giving you a signal that it's overheating, it's getting oversold, it's even red here. But we want to see if this is going to start to diverge, right? So get this ramp up, and we're consolidating here. It looks a little different, you know, this characteristic of this stock looks different than before, right? We're just going straight up here. And I mean, it could be argued this kind of looked like a top, or this looked like a top. So you've got to be very careful when you're shorting and swinging short. But this is what I'm going to look for specifically. Okay, so now we have this MACD, it's starting to come down. And the RSI is moving down, but the stock is still in an uptrend, right?
So
Now we're
usually
starting to,
RSI usually increases with the price increase. And when you see that discrepancy, that is what JP is talking about.
yeah, you just want to see, these indicators are now starting to point lower after being very oversold, right? It's overheating.
Overbought, right? Oversold is what it's.
Sorry, overbought. And now they're starting to come back lower. That is a divergence here. We got the MACD just crossed, right? The RSI just came off almost 50% at that point, right? It was over 80. Now it's 47. It's just starting to break trend. So that is a signal that the trend is weakening and you might get a reversal. And especially after a big move like that, there wasn't a lot of time to trade in this area. So there isn't really any support in here. So if it cracks, it's going to drop fast. And you see that sudden drop.
And how are you determining where to exit your short position? Like when you're trying to see how far it will fall?
So that, that's tough to say because if you exit, I always want to exit early. I'll put that first because you don't want to get caught in a situation you held a little too long and it, just jumps up on you. So exiting early is my personally preferred method. You're gonna just look at the chart and to see, where is it trading into versus a daily level or a weekly level, and how is it moving into that range? Are we accelerating there? Are we just sitting there, right? Typically, after a stock accelerates significantly lower, after it breaks support, and then it just starts to sit there, right? It's not really going down as much. That would be a warning sign for me to exit.
Okay.
I'll show you one more example. So Plug, similar stock, it's an EV stock, right? I mean, this stock was like $1, maybe it was even under $1, and the thing ran up to 70, right? A lot of short sellers got killed in this move. So exact same process, right? You're watching the RSI, it's just printing red here, and you're in this massive uptrend, but we do get this big acceleration. So there is no real support in this area, right? We didn't have enough time to trade in here. And let's assume we don't know that, right? Nothing really definitive, RSI is very slowly coming down. But now it's come down more. And this MACD is starting to pivot. There's not much volume here. And you get
you're
that,
seeing the break in the rapid upward movement.
Right. You get that trend break. You want to short a bounce off a key level. And you cover when there's a change in trend characteristic. Now we're not moving down as much. We're starting to hold. I would definitely be out of the trade at that point.
And how do you utilize volume profile and pivot points when you're looking at your trades also, since we already have the charts up?
Yeah, so this is a weekly charts for just very big picture. Volume profile really helps me understand how people are structured in a trade and where price has pivoted before. And I see a lot of people put up volume profile in their chart, and their analysis basically like, oh, volume traded here, volume traded here. But there's a better way to approach that, and I think we can use what's a hot stock recently that's been going crazy?
AMC.
That's easy.
AMC.
That's a popular one.
Crazy stock, right?
Yeah. And you're right. I've seen a lot of people, volume profile has gained a lot of popularity recently. And, a tool is only as good as the person using it and how you're reading it. So it's good that you're going to show us how it's properly done.
Yeah, I don't want to go crazy with like 20 different indicators. I try to keep them as minimal as possible. Obviously price action is the way to do it, but volume profile is the second best, right? So over here, right, you see, I think this is a 5-day, 15-minute chart, right? You see these distributions, right? They call them histograms. And you can notice, right, there's a lot of volume up here. There's kind of a middle section and a lower section. But what's interesting here are these dips. That is a pivot. Okay, that right here indicates that that is where the order flow has pivoted before. And that is a level that I'd watch to see if we start to trade, for example, we're trading up here, right?
Mm-hmm.
Stock was going crazy. And, you can see a pivot right here. So now I know if we start to trade under here and reject this pivot, order flow has the potential to change lower. And this entire profile here, buyers, they're in big trouble. Right? So for example, right, once we cracked down, where did we pop to? We popped right to that pivot.
Right.
And we trended down.
Awesome. Since we have the AMC chart up, I also wanted to talk to you about how to spot traps. And I feel that possibly this AMC chart could be a good example of that with the MACD divergence, which I'm sure a lot of shorts have been waiting to get on this for a good short position. And I've also watched you many times being able to spot short traps, long traps in the room. Do you think possibly this MACD divergence on AMC come Monday would cause some trouble for shorts to be trapped in this?
So normally, like if I see a stock that looks like this, like if we look at the daily chart here, I mean, this is a wild daily chart, right? $1, $70, right? I mean, that's crazy. And you got to think about like the context, like who's trapped in this stock. Like the other day, I just saw a press release that Citadel, one of the biggest hedge funds in the world, now has a $3 billion loss in AMC and a few other stocks. And they're just trying to hold. I don't think they have any plans to cover. So that is kind of something you want to keep in the back of your mind. Like if this thing starts to ramp up, how much longer could they hold to? And I think they could hold a lot higher.
Mm-hmm.
So somebody's trying to take them out of their position here. That's one thing to consider. MACD divergence here on the daily. Let's take a look here. So yeah, you are starting to see that hook, right? I call this a death hook. And RSI was oversold, but where you want to short it, overbought. I keep flipping those two.
It's okay. I just want to make sure that we're getting you correctly.
So where you want to be shorting is after that initial trend break. Either you short the initial trend break or you short that first bounce. Now that it's already pulled back, it could bounce higher and you would want to watch failure. But look here. So you get this big move up in RSI and the MACD is ripping up. Mm-hmm. And now it's starting to pivot here.
Mm-hmm.
Right here is when the RSI is starting to come off overbought.
Mm-hmm.
Okay. And you get that move down, bounce. It rejects a pivot level of 60. That's when you want to start hammering it for a day or two. And then now, how much did we retrace off the highs? That's a 44% correction. So, it definitely has a lot of way to fall all the way down to a couple bucks a share, but I don't really want to be pushing into a stock after it drops 40 to 50%. I think it needs time to breathe and reset, and then we can start to reevaluate.
And does it make any difference to you when it's a stock that has moved like this, like when it has such a crazy like upward trajectory so quickly, like like we saw with GME? Does that ever factor into your decisions when you're seeing something with so much momentum?
Yeah, definitely. I mean, if a stock moves up this rapidly, right? Like Tesla, for example, it took a whole year to get there.
Mm-hmm.
I mean, this stock performed better than Tesla in a couple months. So that has to make you kind of step back a second, like, hey, this is crushing short sellers. Like, this is short seller Armageddon.
Mm-hmm.
Do I really want to short a stock that's just killing people left and right on the short side?
Right.
And my answer is no. I don't want to be aggressively shorting or swinging short a stock like AMC.
Mm-hmm.
This is for me more of a day trade.
And when you are shorting, do you prefer to do it through options or shares, or does it really depend on the stock?
So, I mean, it depends on a number of factors, right? Like AMC, I traded it long momentarily with options,
Mm-hmm.
and it depends on, like the price of locates for a stock like AMC when it was going nuts. A lot of brokers were taking away the borrows and they were tightening up margin. So I
Mm-hmm.
probably wouldn't want to use shares at the time. Just the cost to short it would be too high.
Mm-hmm.
But then, if you're on the wrong side of the time expiration or the thing just keeps ripping on you on the options, you're going to get crushed too. So preferably for a stock like this, I'd prefer to use options because I can position size myself and there is no like unlimited loss factor, right? For example, I buy $1,000 of puts on AMC for the end of the week, early in the week. Then if it just continues higher, then I lose $1,000.
Mm-hmm.
If you shorted $1,000 of AMC at $5, I mean, you got screwed.
Mm-hmm.
So options are my preferred method, but sometimes I will short the equity directly.
Got it. And how are you, a thing that you brought up was choosing expirations and kind of going also into the long versus short side. Are you able to utilize the options data at all to spot where traps could be being set? And also, for traders who are newer to options, what expiration do you recommend utilizing for day trades and then for swing trades? So multi-part question.
Very
Sure,
good
yeah.
question.
So it's a multi-part answer, right?
Mhm.
When you spot a trap, the first place I'm going to look is the chart, and I'm just going to think about, who's positioned well and who's on the wrong side,
Mhm.
right? And then from there, if you want to trade options, I would recommend not choosing options expiring very, very soon, even for a day trade. So like
Okay.
if it's Thursday afternoon and you're trying to short a stock like AMC and you're a little bit inexperienced, I would probably not buy the puts out of the money for tomorrow.
Right.
And like, for example, look at this chart here on the left, right? You get this correction from 60 down to 39. Like what percentage drop is that? It's a 34% drop. And I have
Mhm.
this whole 30% rule, 50% rule, right? When a stock rips up 30%, potentially look for a pullback. And when it drops 30 to 50%, I look for a bounce.
And
And
why do you choose those percentages?
that's just what I've noticed repeats in time over and
Okay.
over again, 30 to 50%. But it has to hold. And
Mhm.
it has to do a certain characteristic. So you get that V bottom. Okay, that's not just like, it's not like it just grinded lower and like kind of sat there. It
Had the rapid
accelerated
sell-off.
and ripped higher, and
Mhm.
that's a pivot. This
Mhm.
42 is a pivot. So that's another factor. And the next day, right, it comes in to hold the pivot after a V bottom. What does it do? Just rips right up.
Mhm.
So that's a trap there. It's the same thing for the short idea, right?
Mhm.
You get that accelerated top, that V top, and it drops. What does it do the next day? It comes up, rejects this pivot here,
Mhm.
and you now move down.
And are those levels potential supply and demand levels as well? How does that factor in? Like, because I mean, you can see that clearly the pivot points are support versus resistance. Are you able to spot supply and demand levels utilizing the same tools?
I wouldn't think of them as just supply and demand zones, but if price starts to get into that range and now, either accept it or reject it, depending on if we're going up or down, that just means that now, price has the potential to now change directions very rapidly.
Okay.
So it's just, this is where price has pivoted before. If we do, this, if we move higher and hold that pivot lower for a bounce, right, then we have that potential to very quickly change direction.
Right, and that actually brings me to another thing I would love to cover for our new traders, or actually even longer term traders, the blow off top. We hear you and other short sellers like Alpha talk about that all the time, and it's such a easy one to spot and such an important one to know. Could you tell us a little bit about what a blow off top would look like?
Yeah, so blow off top just means a stock is very extended higher, and there's a lot of short sellers that are trying to hit into the stock, and they all, or a lot of them, blow up. They get taken out of their position, and now the price could come in from there.
And when
What
you're
does it look
looking at that intraday, could you describe a little bit what that looks like? Do we see the rapid, like a rapid upward movement with a huge influx of volume coming in, and that can be an indication of where short sellers are finally covering?
Yeah, let's go over AMC because we've been talking about this one here. So
Okay.
AMC, I was long because I didn't see the blow off top, and it was holding a few pivots. Like, that was the basic idea. And a lot of people wanted to short this, but there's multi-billion-dollar hedge funds in this, and I don't see any indication that they were taken out of their position. Right, we're just popping up, coming right back into trend. Right, popping up, holding trend. So stock is just trending to me. Right, some people are getting taken out here and there, but we're looking for that big firm, big position blowout. And we started to get that on this day here. What day was this here? It was June 2nd. And I mean, look at the volume that it's traded that day, right? 766 million shares. So you want to find that crazy high volume day. It did trade a lot of volume, so that is an indication too. But you get that crazy move, right? The stock almost does 100% intraday. That is what I'm generally looking for in a stock like AMC, for example, just based on its history. And where you're going to start to see that is where the tape and the chart start to accelerate just insanely, even after going up, $10 a share, 20%, 30%. It just starts to really accelerate. You get that huge move up. That is what I'm looking for a blow off top. Right, and it actually went a little higher here. It went up again here, right? So you make a mistake shorting, get trapped, and then get killed again.
It ended up like 77 pre-market, I think, on one day.
Yeah, I think the next day actually, it went up to 77. So that's someone else getting probably stretched out of their position here too. So you want to be careful. Like, you don't want to just short into the blow off top day. That sometimes, like GME, we saw those crazy 50% death drops intraday. Right, those are super rare, but that can happen. So I was scared of staying long AMC for that reason. But you want to see that crazy acceleration even after it's broken out multiple times, and just something that's very different in the chart. And I prefer to use a 15-minute chart for finding blowouts.
Okay.
So you usually like, not on this chart specifically, because the AMC has been a little different. Normally it's that top wick and then the break of that past support, which was a previous resistance, and then that's when you get on, because I know you love to short and you're very good at it. That's where, if you're long, you want to get out of your long position. If you are short, that's a beautiful place to get in and try to put a stop loss above that wick. Especially I saw that on the last chart with plug. That was a very good one. But when it comes to AMC, where the entire world, including my mom, my dad, my uncle, everybody I know is talking about, those blow off tops are the reasons why we get those huge moves upwards, because the smart shorts, they enter at those places, and that does tend to be slightly different, but rule of thumb, usually those blow off tops are really great indicators, and I see that you use that in the room too.
Yeah, absolutely. If you want to short a stock like this, you have to wait for the blow off. And same thing on an intraday timeline. You want to find those divergences, right? MACD was overbought, and you get the divergence from the price. Guy Gentile was talking about that in the room, right? We're getting a divergence in the MACD, and right the next day you do have a down move, but killed a lot of people on that up move. We are still having this downtrending, right, divergence now.
Mm-hmm. Yeah, that down trading divergence is a good one to talk about too. I think a lot of people don't know about that. You can use that as a trend as well.
Yeah, I mean, you look at it, before, right? It was just going up and up and up, and now it's just downtrending.
Mm-hmm. Yeah, if you look at the peaks, you'll see that is one way to, another indicator to use.
And speaking of AMC, when we were talking kind of at the beginning, you mentioned how we have seen, so many crazy runners, and it's almost become like a new normal, especially when you're talking about small caps, always looking for that massive runner every day. Does that tell you that there's a change in the overall market? Because you've been trading a lot longer than us. Like, what are you seeing as far as a shift in the way things are done, or if there is any shift whatsoever? Because seeing these crazy runners, these squeezers, the insane influx of retail traders, like, what are the changes, I guess, that you're seeing in the market?
Yeah, that's a really good point that you mentioned, and it's a factor of many things. There's definitely a big change in how the market's been behaving, especially the past 2 years.
Mm-hmm.
It's a product of all this liquidity, all this funny money, right, that they printed. And before, a couple of years ago, if you made 20, 30, 50%, 100%, that was an epic trade.
Mm-hmm.
Now, if the stock doesn't return 500% in a week, you don't even like the stock anymore, right? So
right.
The whole concept is changing, and you're just seeing all this volume come in. I think these runners are doing, I think 10x the volume, right?
Mm-hmm.
And during COVID, they printed $9 trillion in excess money. They're flooding the markets in the bond market, and that's making its way into stocks. And I mean, I can definitely notice, I think everybody else has noticed here. So very big change in how the market's trading, and people's psychology is now changing too.
Mm-hmm. And do you think it's sustainable?
No, it's definitely not sustainable.
Okay.
So
what do you think are some of the repercussions that we might see? This is a topic, of course, I love to talk about, and you enjoy talking about. We don't know what's going to happen or not, but what are some of the logical repercussions that we're headed because of all this?
yeah, so there's, I don't know if you've seen that chart of like a bubble, like at the top there's all that mania, this is a new paradigm. Do you know what I'm talking about? That
Mm-hmm.
we're in that bubble territory in a lot of different asset classes, and I think it's very unhealthy for the public in general, because now people don't invest because they want to think about, hey, in 30 years, if I make smart investment decisions, my S&P style portfolio, 70% stock and bonds, whatever the mix is, it's gonna double for me, and I'll be able to help myself retire or help my kids, something like that, right? Now everyone is just trying to get rich quick, and they have a gambler's attitude in stocks. So that becomes dangerous because a lot of these people have no idea what they're doing, and they're putting their life savings in these stocks, right? You're seeing these Reddit forums where they're like, never sell, hodl to the moon, all these type of, these sayings, they're funny, they're catchy. I read them, I look at the memes, I laugh. It's funny, but
it is dangerous.
It's very dangerous, right? A lot of these people are trading options. I think it's a disaster for most people, especially if they're newer traders. It's gonna end up in tears for them.
We can only pray for them. The evolution of these type of moves are normally a warning sign of a possible bubble. It just sounds weird to be talking about that anymore, because the market has been continually going up and up, and like now we're almost like a conspiracy theorist these days, but it is a very important subject to talk about. You look at Ray Dalio, and he's talking about possibly yen becoming the next reserve currency of the world. This is not a joke, and it's not like just anybody talking about it. We have like really well-established people that speak of this huge possible problem ahead, and there are reasons for that. So one of them, we have to go back to history and see how those happened, what were the similarities. Of course, there are many differences with the time, economy, technology. We do take that into consideration when we speak of this, but there are always similarities as well. Like, one being, oh, this time is different. This time it's not going to happen. But what are some of the things that you think, are definitely a warning sign? For example, one of them I think is this AMC and GME going crazy, liquidity being just so available, and the other ones, just as far as economy, anything you can give us.
Yeah, when you start to see these insane price spikes, and it's not just like one name, one sector, it's pretty much every sector is having this crazy run up. And there's a lot of talk about, are we overvalued? Is inflation too high? Are we going to crash? Are we just going to melt out forever? That type of discussion is becoming more and more common, but the pullbacks are just getting bought up every time. So when I think about history, right, like there's a few other cases where we've had these type of moves, and I would say the periods that seem the most similar are the 90s, right? That dot-com mania, and you had a lot of these stocks that would IPO and go from 10 to 100 if they just put www in their name. And now, as long as you're any stock that has a pulse, then you're going to double anyway in one day. So very different. We've never seen anything like, I would say, this period.
It seems like we have trend rotation too. Like we saw last year, it was any stock with the COVID test or that were related to that. And then we saw SPACs, and then we saw, it seems like there's a rotation into what's cool and what's hot and what's going to run.
Yeah, I mean, there's all this excess liquidity in the markets, right? That $9 trillion, and it was printed to help us from collapsing as an economy, and it certainly did. But you got to ask yourself, how much of that actually went to helping people and boosting productivity, and how much of that is just gambling in the stock market?
and how much of it goes to big banks and the wealthiest 1% who are already rich, so that money does not necessarily go into circulation where it can help economy. It's just sitting there.
Yeah, I mean, like I was reading the Wall Street Journal the other day, and there's a survey that they did. What percent of Americans can come up with $1,000 cash at a moment's notice? And I was thinking in my head, I don't know, maybe 80 to 90% could. Actually, the survey said 70% of Americans can't find $1,000 if they needed it.
Yeah, I remember I actually saw that article before COVID, and I was shocked myself. It's very sad, and that only shows that how long we've been having this problem for. And
yeah, and the income and
it actually makes me think further into this of, did we need to have some kind of a reset? Was some of this part of just saving and changing the game? Because this was literally an issue pre-COVID, 70% not being able to have $1,000. They actually have it now, but it's a temporary thing.
Yeah,
I think this
absolutely.
goes back to 2018, where a lot of banks were having issues and the Fed having to double down, and the market, the economy is pretty much addicted to all these stimuluses and easy monetary systems. The moment they come out and they have to increase rates, which they have to, for people who know a little bit more about this, you and let's say Ray Dalio, they know they can't keep these rates down too much longer, because once the inflation goes up a little bit higher, there's going to be a lot of conflict. So it's not a permanent fix. And once they do fix that, no one's going to want to keep their money in.
I mean, the discount rate, the federal funds discount rate's at 0.25%, right? And look at this market here, right? And you brought up a good point, right? There's just huge income inequality in America. And where did this $9 trillion go? I mean, it definitely didn't go to them. I can see where it went. It went right into this, right? It's in AMC, it's in GME. It's being rotated here for gambling. And a lot of people want to compare this to the 90s, and it has a lot of similar aspects to it, but inflation was very low in the 90s. The interest rate was at 8%. We had a very healthy economy there. And this COVID drop here, right? I think that was supposed to be a big one. That should have gone much lower, but they stopped it from becoming an actual bear market, and we just had this insane rally. So they're prolonging a potential bigger pullback that is yet to come. When is it
Until
going to
when?
come?
Yeah.
When is it going to come? It's tough to say, right? You take a look at this chart, every single pullback is getting bought up. It
Mhm.
looks like, we're in that melt up phase, right? The pullbacks are getting smaller.
Mhm.
That's a signal to me. You get these deeper pullbacks and then these smaller pullbacks and even smaller pullback. It seems likely we're going to get some sort of pullback soon. But once again, all that excess liquidity, they might end up buying the dip and taking it right back up. So
we think Fed knows everything and they're God, but honestly, they seem so confused and dizzy themselves, like not knowing what to do. Of course, we see Powell very confidently say we don't run out of bullets, but there's no way. I think
he's not going to go on
lie.
TV and sound unconfident.
He just sounds so confident.
He's not gonna go on and be like, listen, guys, we don't know what the fuck's going on, but GME to the fucking moon. He's not gonna do that. I mean, I would like it if he did, but he won't.
100%. I mean, no Fed president wants to sit there and say, I was the guy who created the second Great Depression. they can never admit when there's a problem, and they've never admitted in prior bubbles that, they said we're fine here in 2000, 50% pullback. They said we're fine here in 2008, 50% pullback. So they're going to say we're fine here. They can't ever say we're not.
Yeah, I mean, that would cause, if you think about it though, too, if they were to say like something is seriously wrong, imagine the panic that would reverberate throughout the entire world. If, the heads of the American economy were to say something is seriously wrong, it would cause massive panic, in my opinion.
Yeah, we would probably drop, 30% within a month, right? So they're going to tell you everything's fine, and meanwhile, all their buddies are probably selling, right? Or trapping shorts and taking them higher until they sell. But I just want to show you two things here, right? When have we seen inflation like this and money printed like this, and what happened? And I don't want to go too much into length about it, but we didn't see that here. We did have a little bit after 08, and that's why we got that recovery. The 70s, right? We printed a lot of money to help stimulate a war-torn economy. And it just led to these wild gyrations in the market. Okay, until we finally, had a bigger bust and we started to improve the economy. But it took a decade to improve that bust. And one other time here is in the 1920s and 30s. Right, 1920s, we were post Spanish flu, seems kind of like COVID. It was a respiratory illness. World War I just ended and the economy was in a slump. So they started to stimulate the economy by printing and leaving interest rates low. And you get that crazy ramp up and bust. They printed again here and we busted again. So, I mean, it's a matter of time. Eventually things will have to cool down. But how long can this continue for? It's tough to say.
And there were also other factors included that, obviously we're not covering right now, because I think that would be a complete other episode, but other factors that go into, that bubble rise and then burst. But I'd like to, I guess, for people who do not have your experience, what do we need to watch out for, and what can people do after it bursts, should it burst?
So, I mean, you want to watch for inflation and interest rates, right? Whether the Fed raises the interest rates or the market does that by itself, that's something you want to keep an eye on. That's going to set the tone for risk. And you got to have a plan. If you're buying, the most highly appreciated assets of all time without thinking that they could drop 20%, 30, 50, 80, 90%, you got to take a look at history. History tells us time and time again, things eventually do come back in. How deep they pull back, it depends on a lot of factors. So have a plan, know what you own and what you're trading, and if it goes against you, you can always get back in. You might want to have an idea on where you want to get out.
Like what risk you're willing to sustain before you cut out.
Strategy as well. Some of the people, depending on what type of possible crash we would have, if it's a decade long or it's going to be just a very sharp, just position yourself to what you want to do. Do you want to, for instance, own Apple stock at 80? And so, you have to go learn and see what's a cash secured put where you can buy that and just benefit from the drop. Like, it's not all about just shorting or getting out of your position. There's multiple ways of making a lot of money in that type of environment. I personally, I think if it does come to be that way, where we would have that huge pullback, I personally can't trust too much of a real recovery for years ahead. But that's why you have to see what you want. Like, do you want to buy Apple at 80 and hold it forever? Like, so position yourself that way.
Yeah, absolutely. Like, what's your goal for this trade and where are you going to be wrong. A lot of traders will often have like an idea where they want to get out and they readjust it. They keep readjusting it over and over. So make sure your stop it's reasonable, right? Don't stop out when it's Armageddon. You have to have reasonable expectations. Don't try to get rich quick. It's not going to happen unless you bought AMC or GME.
Well,
But-
yeah,
And
I
we're
mean,
jealous.
we have seen it happen, but you can lose it quicker than you gained it. So if you do get rich quick, enjoy it.
Just get out.
and,
Don't
get,
get
and leave.
really.
Most lottery winners go bankrupt, right? It's
Yeah, that's true, because they don't know how to
human
manage
nature.
it after.
Or learn the safe way to invest that money. Honestly, I know a cousin of mine who like literally got rich overnight on AMC, and he's just in love with day trading, and I'm like, please just take your money, go learn. And then
What
come
if
back.
this is all okay? Conspiracy theory. What
Sure.
if this is all big money is what? Because they knew how to get us addicted to cigarettes. They know how to get us addicted to coffee, pharmaceuticals. They knew how to get us addicted to the stock market to take all of our money and run.
I mean, that's of course what they're doing, right? These quant funds, they're paying billions of dollars to get a team of analysts, behavioral researchers to figure out what excites people, right? They've contracted with Las Vegas. They know.
It's a reward system, of course.
That's 100% part of the game for them.
What's
Scary
the
thought.
yeah, and also some people are saying that this is the way to get the mass media attention for people to bring whoever didn't bring their stimulus money in, and whoever is concerned about the market conditions, to sort of show them, no, this is the gains you can get in the market. So it's sort of a scam or a gimmick to so saying that they could possibly be part of this GME AMC run. It's the best advertisement you can possibly get, isn't it?
If you had the secret to making $1 billion, why would you tell anyone unless you want to sell it to them?
Very true. Thank you so much for coming on and speaking with us, JP. I think we should do another episode soon where we go into further conspiracy theories and how to save
I could talk about that stuff all
ourselves.
day. So yeah, it was my pleasure. Thank you so much.
JP,
Thank you.
thank you. And I also want to let everyone know that JP has just recently started his own YouTube channel. He's one of the best technical analysis colleagues I've ever came across. So please check him out. He's one of the best, and he just got started. So can you let us know how they can find you?
Yeah, I'll send you the information, but you can find me on Twitter. You can find me in the the Wall Street Underground chat room. I wouldn't say that the best technical analyst.
One of the best you are.
I have my own style. So you hate it or love it, and I'll send you a link to the YouTube channel as well.
Thank you. We'll post that.
Thank you so much. We'll see you again on Monday.
All right. I'll see you later. Have a nice weekend.
You too. Bye-bye. Want more Trader Babes? Subscribe now and connect with us on social media for exclusive content and access you won't find anywhere else. And we'll see you right here on the next unforgettable episode of Trader Babes.